If you have the Market Week report from Quadras Capital, this was what the analyst there says about the stock market in the weekly report. It says in the short to medium term, trading sideways is likely to remain the theme in the near absence of a near-term positive trigger for equities. However, macroeconomic fundamentals remain strong and support gains in the long term. Let's check in with Johnson Chukwu, who is the CEO at Cowrie Asset Management, to start the current trading week on the equity side of the street for us. Good morning. It's good to have you. Let's check in with you. Do you have an idea the type of vitamins that the stock market needs to ginger this market back to life? Do you have an idea where can we go shop for this multivitamin?
Well, if there's any factor that can contribute to a reversal of the current fortune or the current weak performance in the market, it has to do with the political environment. The second factor is the cost of funds. That is the possibility that the Monetary Policy Committee will reduce interest rates. And unfortunately, both factors are not likely, are not things you can actually hazard a guess on. One, it is quite unlikely that the Monetary Policy Committee will reduce rates given the level of liquidity coming to the system. Two, the political environment is not very likely going to improve until after the election. So I think we should be prepared for a relatively long period of time of a weak equities market, given the current macroeconomic and political environment.
You are the CEO of a brokerage and investment firm, Johnson Chukwu. So what are you doing at the moment? How are you positioning your clients? And of course, you're also a dealer. How are you dealing with the market right now?
Well, what we're doing now, because we trade across a large spectrum of products or securities. We have the fixed income market products. We have the Eurobond securities. We have then you have the real estate instruments. So what we have done is that we are not limiting our customers to only the equity products. And for those who have to take position equity product, we're looking at those who are making strategic investment decisions, who are actually buying to take long-term stake in some of those companies. So the current weak market environment presents its own opportunities, but it's not likely for speculative investors, not for those who are going for the short term, who are looking for 30 days, 60 days, or 180 days to exit the market. So what we have done is to look at the broad spectrum of securities that we trade in, and then advise our clients on how to realign their portfolios. At this point in time, there are still good returns on a number of Eurobonds. You observe that foreign investors are dumping Nigerian issued dollar-denominated instruments. It's a time when Nigerian investors can take that position, can switch their position with the foreign investors, given that the underlying assets are still very strong, just because there's heightened political risk within the environment. So you see, the key thing about the market is that when one market is weak, there will always be compensating market instruments that can take investors' funds.
This fear gripping the market at this point, penultimate the electioneering period, is this exactly the same way it was 2014 half-year period, second half, before the 2015 elections?
Well, if you look at the figures, the equities market figures in 2014 compared to 2018, the market was relatively stronger. Yes, it also suffered political risk, but also the political environment is different from what you had then. In 2014, we had two very strong political parties. By this time, we had a defined candidate for the ruling party, which we similarly have now. Then we also had an opposition that was quite strong. Today, we don't have an opposition that is strong. Interestingly, the crisis we're having in the ruling party now was also there in 2014. So if you look at the two periods, they closely mirror each other, but there was one could say there was also other factors. At that point, oil price was going down, currently oil price is going up. So on a balance, if you look at the oil price environment, would I actually have thought that the equities market should be stronger now than it was in 2014.
One report here says there is an absence of near-term positive trigger. So, which means in the short term, there's nothing positive to trigger this market, to ginger, as some folks say, the swagger of the market forward. Don't you think there's still something that the government, the Buhari's administration, could still do to give the stock market some measure of strength before this season goes over?
Well, I don't think, short of direct intervention, which is absolutely not necessary, the things that drive the market are one, the economic outlook, two, the political environment, three, the performance of listed companies. And if you look at those factors, the political environment, we already know that nothing will materially change until the election is over. On the macroeconomic environment, we've seen a very sluggish growth in the real sector. We saw a GDP growth of 1.95% in the first quarter. That may just, the growth in the second quarter may just be at best be neutral. You may not see any material improvements over the growth in the first quarter. So in terms of economic growth, we are not likely going to see a bullish recovery. And then if you look at the performance of the underlying companies, also we've seen a situation where the results that came out in the first quarter of this year, and we are mixed. So one is not expecting any major improvement in the performance of companies at the time when there will be dominant political activities. So just similar to what the analyst report you read now says, I think in the near term, there's not much anybody can do to reverse the current weak equity performance, unless the Monetary Policy Committee brings down monetary policy rates and drives down interest rates to single digits, which, like I said, they have to contend with the issue of pressure on FX. They have to contend with the issue of inflation. And I think their priority is to maintain price stability. They're not likely going to lower any of the key benchmark rates. If they will do it, it will be very inconsequential. But I doubt if they even lower that before the election period. So, given that situation, I do not imagine what will lead to a bullish market rally. That does not mean that you are not going to see the outliers. Those companies that are doing much better than the environment or the market, I think investors will still base on those such stocks. A few of them are still in the market.
Yeah, that's where I'm going. Johnson, that's where I'm going. If I have a hypothetical 100,000 naira, like I put forward to Eromosele earlier, and I'm doing equities, you're not going to turn down my 100,000 naira at Carrier Asset Management. I'm sure about that. So, where would you be advising me to put this 100,000 in the equities space?
Well, I would tell you to put the money. I would spread the money between consumer goods, industrial goods, and the financial institutions. The consumer goods sector are largely bellwether institutions in the sense that no matter what happens, as long as there is no civil strife, even if in the presence of civil strife, people will see it, people will still consume the basic necessities of life. The industrial goods segment, I think, will benefit from disbursement of capital expenditure budget of 2.87 trillion that the government likely to disburse since the budget has been signed into law. And then the financial institutions, we've seen a gradual improvement in their non-performing loan situation. As the economy recovers, the quality of their risk asset will also improve. So we expect that over the next couple of months, we should see, at the minimum, stable financial, particularly the banking industry.
Are you disappointed at the way the talks and reports in the media, what have you, are now overnight, over the weekend from the Securities and Exchange Commission about the MTN planned IPO?
Well, if you recall, in one of the interviews I granted you, I think 2 weeks ago, I say that the MTN public offer is looking very nicely for this financial year. The simple reason is we are moving towards a heightened political environment. If that offer does not take place between August and September, I think it will be difficult for them to come to the market in the last quarter of this year. And given that SEC said they've not filed, I think for me, that might be an indication they may be considering possibly delaying the offer to come into the market at the end of the election period.
But it looks a little bit, you think the window is closing?
Yeah, the political environment is going to heighten. If by the time you get to the last quarter of this year, the parties will be holding their primaries, all attention will be focused on electioneering activities, and that's not the time when you come to the market with such size of offer. At that point, a lot of resources will now be channeled to political activities. I do not imagine that MTN, in their wisdom, will want to come to the market in the last quarter of the year for a 400 billion naira offer.
Very interesting. Okay, thank you for your time this morning, Johnson Chukwu from Carrier Asset Management, the Chief Executive Officer. Do have a great week, and we thank you very much for speaking with us here.